Welcome to Banking on Nature, Sustainable Finance and the Environment. Special welcome to all of you who are watching virtually. But I gotta give a special acknowledgement to all the students who got up early to come in on a Saturday. Something that I, as an undergrad, would have never done, so. I'm Mark Tracy. I'm professor of sustainable finance and investing here at the Institute at Brown for the Environment and Society, or IBES. For those of you not aware, this is actually the final event, I believe, of what is Brown's Climate Week. The first time we've had a Climate Week here at Brown, and I can say it has been exhausting, but also really exciting. And a number of the panelists, who Ricardo will introduce later, have actually done yeoman's work and have been at multiple events during Brown Climate Week. So very, very much appreciated. Before I make some additional comments, I want to thank a number of people because this event has actually been about a year in the planning and making. So want to thank Jill, Lily, and Jess on the IBES team. Robert, my student intern, and the other students volunteering today, like Alumni, our student photographer, thank you. Kim Cobb, our fearless IBES leader, and particularly Professor Ricardo Bayon, who has been instrumental in helping plan this and have been a great thought partner in bringing speakers here today. So I'd also like to thank, of course, our amazing panelists. We'll be coming to you from as far away as the Amazon and East Africa. Special thanks to those panelists who are staying up very late in their time zones, particularly those folks who are coming to you from Kenya later. So please join me in a round of applause for all those people. Quick housekeeping item. In the event of a fire alarm, please move quickly and calmly to the nearest exit and take a moment now to find where that nearest exit is to you, and please keep the aisles clear and any belongings you have close by. So, why are we here? Well, we're here to talk about an event or an issue that is particularly close to Ricardo and my heart, which is the risk associated with our dependencies on nature. And we think that this represents a systemic risk that really hasn't been talked about enough or addressed enough. We've made some progress, and let's see, in 2022, I was in a very cold Montreal where we had the biodiversity COP, and the parties to the convention agreed to protect the world's 30% of the world's biodiversity by 2030. We also had TNFD debut, the Task Force for Nature-Related Financial Disclosures, at the New York Stock Exchange. And so trying to urge and nudge companies to think about their dependencies on nature. Because it's not only the right thing for us to do as individuals on this planet where we're all dependent upon the ecosystem services that nature provides, it also represents major risk to business and should be paid attention to by investors. I think Bloomberg Neff framed this nicely in their 2023 article, When the Bee Stings, Counting the Costs of Nature-Related Risks. These changes to these ecosystem services can result in billions of dollars of losses to individual companies. So we want to convene an event to talk about this and dig deeper into it. Because through technology, we have, as you'll hear in the second panel, much more granular ways to measure and look at nature and biodiversity. So we have 4 wonderful panels to talk about this. The first will be hosted by Professor Bayon, and we're going to be talking about the corporate understanding of dependencies on nature. At 10:30, I will host the panel to talk about how we measure nature and biodiversity, what is possible, what is scalable. That will end the in-person panels for the day, and then we're shifting to fully virtual after lunch, though you're welcome to watch some of that here in the room. We'll resume at 1 p.m. to discuss and uncover indigenous worldviews on nature, which are critical as indigenous people and local communities are the stewards of much of the planet's remaining biodiversity and incredible sources of local knowledge. And that panel will be hosted by Beto Borges. And finally, at 2:15, Robert will moderate a panel of entrepreneurs working in the nature finance space, pioneering exciting new models for nature stewardship. So you can see we have a full day planned for you. We encourage you to ask questions. You can submit those into the chat. For those of you who are on Zoom, we have a couple microphones at the front for the rest of you. We'll try to allow 10 to 15 minutes for audience questions for each panel. And for everyone who has registered, if you haven't registered, please register because we'll also send out a link to an edited video of all the panels today for your reference. And with that, I'd like to introduce Professor Ricardo Bayon, co-founder of Encourage Capital and professor of the very popular Finance and the Environment class here on the Brown campus.
Hello? Hello?
There we go.
There we go.
Perfect. Thank you very much. I still can't get used to Mark calling me Professor Bayon. That makes no sense to me. I'm kind of an accidental professor. My name is Ricardo Bayon. I started an impact investment fund called Encourage Capital, but kind of the reason I did it is because of the subjects we're talking about in this panel. So I started my career doing conservation and working in conservation around the world. Worked with IUCN, helped set up the first Rio meetings, was at the negotiations of the first climate convention, all of that stuff. And I was there thinking, you know, if only we could show people how important nature and climate is, we're gonna all change and it's gonna be so much better and it's gonna work marvelously. And if we show them the science and all of that sort of stuff. And it didn't quite work out that way. And I realized that while I was working in a nonprofit trying to spend, you know, 10,000, 100,000, if we were lucky, maybe even $1 million to protect landscapes, there were people spending tens of millions, if not billions of dollars in things that would essentially make everything we were doing obsolete. And I asked myself, why is that? Why, right? Like, I understand that nature is so important to us, not just materially, but spiritually and all these other aspects. And it seemed to me like, this is crazy. So I started digging more into finance and went down a finance rabbit hole and realized the issue is money is the operating system on which we run this planet, for better or for worse. And it's a very powerful tool. And the reason it's still there is because it is an incredibly powerful tool and it does many, many things for us, right? Like many of the things we take for granted from our, you know, computers and laptops and phones and, you know, cars and other things, in fact, were made possible through this system. But it has major, major flaws, right? It's broken in many, many ways. One of the most important ways and the fundamental ways is that it doesn't see nature, or at least it doesn't see it until it's dead. Right? So you take a forest, and when it's standing, giving us all these services, clean air, clean water, what have you, doesn't show up on balance sheets for people making decisions based on finance and our operating system in finance. Cut it down, turn it into wood, you know, palm oil, whatever. Now it sees it. Now it's in balance sheets. So the incentives are wrong and misaligned. And so I dedicated my entire career to figuring out, how do we change this? How do we move this? Which turned me into an accidental financier and investment banker, and created an investment bank to do just that. So I am super delighted to be here to explore how this can work. How do we actually, you know, begin to have our economic system see nature for what it is in its totality, not just when it's dead, but when it's living, when it's alive, how it interfaces with communities, indigenous people, local communities, and this symbiosis that we have with nature and natural systems. Because at the end of the day, that is what underpins our entire economic system. Without it, we can't have an economic system. So first I'm gonna ask the panelists to introduce themselves very, very quickly. So give us a little bit of like, what are you doing in this space and how did you get there? But try and keep it as much shorter than I did, because you're gonna be speaking from now on. And then we'll begin some round of questions. Let's start over there, Rob.
Hi, everybody. My name is Rob Zochowski. I'm an executive director at an organization called the Capitals Coalition. And that's relatively recent because I ran an organization that was focused on impact accounting, which I'll talk more about, how that changes the system. And we just merged into that. So, yeah.
Good morning. Good morning, everybody. I'm Greg Curtis. I'm with Patagonia's nonprofit shareholder, Holdfast Collective, and really looking forward to the conversation today.
Hi, everybody. Good morning. My name is Marieke Spence. I'm the Executive Director of Impact Capital Managers in the ICM Institute. We're a trade association of private capital impact funds investing for superior returns and meaningful measurable impact. And it's a pleasure to be here.
Thanks, and I'm Carl Palmer. I'm the Executive Director and founder at LegacyWorks Group. We're a tandem hybrid. We're a for-profit nonprofit working under an affiliation. And we work with communities across the US and Mexico and nonprofit organizations, coalitions, helping them tackle these kinds of challenges.
Yeah, let's start with you, Carl, because you've had a very interesting trajectory in your career, almost mirror of mine in some ways. You know, you started a venture that was trying to put a value on nature called Beartooth Capital. Now you're running a nonprofit hybrid with a for-profit entity, trying to work with communities in nature. How do you see this happening? How do we change our economic system, have it see the value that nature provides?
Yeah, it's a great question. Probably much like many of you, my eyes were open at an early age to how broken the system is. And I was concerned, confused as to why we were destroying the natural assets that we depend upon. That started early when I grew up in Miami, Florida, and watched our neighborhood near Biscayne Bay get converted from open spaces to subdivisions, and watched them fill parts of the bay to build houses back when regulations were much looser. Ended up coming to Brown, studying environmental studies and architectural studies, and I thought I'd combine those two things to try to find better pathways to exactly that kind of need. We need housing, we need infrastructure, right? We need things that markets provide us, but we should be doing them, creating them in ways that don't destroy the underpinnings of our natural ecosystems. Ended up following my girlfriend from Brown, Carrie, out to the Tetons to do environmental education work, actually, and then ran a little nature center in Utah prior to deciding I needed bigger tools, bigger levers, much like you, Ricardo, like what, and didn't know what those were. Ended up going to business school to find out, because clearly the forces arrayed against the things that we were trying to accomplish were so much greater, had so much more power than we did. So business school was a great opportunity to try out lots of different ideas to see where could we create business models that achieved the kind of gains we wanted to see, that protected and conserved and restored natural systems. Ended up, much to my surprise, like Ricardo, becoming an accidental private equity fund manager. That was not in my, not what I said when I was in 5th grade, telling, you know, anybody what I wanted.
You were 5 years old, you weren't saying, I'm going to be a private equity manager?
No, I was not saying I wanted to be.
You, Carl.
I hadn't seen the light. And well, I mean, as an aside, many of our best and brightest do want to be a private equity fund manager or a hedge fund manager, or, you know, you name it, something in finance, because there's so much power and so much wealth to be created there. Our system aggregates so much power and influence in finance. So it's a pathway that if you're seeking wealth, it's a great one to go down. If you're seeking solutions to these kinds of problems, you really got to swim upstream. The finance system is not engineered, as Ricardo said, to value these things or to deliver them. There's some great work underway, and there's great people working up that stream, swimming up that stream. We'll hear more about. And there's some great ideas on the horizon that I think we'll hear about today too. But I ended up leaving business school and launching a private equity fund to figure out if we could invest in real estate around the American West. There are all these degraded properties, places that have rivers and streams and wetlands and agricultural soils, have farm and ranch operations, but have been degraded by the system that we live in because extraction is the norm, right? We extract, whether it's ranching or farming or development or, obviously the more obvious ones like oil and gas. We tend to extract value from natural systems to turn them into short-term gain. And that degrades land, degrades habitat. So there's a huge volume of degraded lands across the world. Our thesis at Beartooth was that we could acquire properties at a lower valuation because of that degradation. We could restore them, enhance those values, both agriculturally and in the American West recreationally, because fishing and hunting sells. Wealthy folks, a lot of them from finance, tend to put a very high value on intact ecosystems where they can go and recreate. So Beartooth was essentially there to arbitrage that difference, if you will, to go raise capital. We raised it from amazing people who care about the same things that you care about. Lots of folks that my business school classmates introduced me to, lots of founders of hedge funds and private equity fund managers who invested with us. We raised about $100 million and went out across several funds across several years and went out and invested in farms and ranches around the American West. And then we brought a lot of public money in, grant money, agency dollars, to invest in the restoration and protection of those places. So we were delivering public goods through conservation easements, the creation of parks, public access, and a tremendous amount of riparian and wetland restoration. I used to know the linear feet numbers, but I can't remember them anymore.
This is a really important concept in this world of financing nature, is this concept of blended capital, right? Like, it's not just traditional investors. You're looking at how do you blend capital from public sector, people who are okay taking lower rates of return, what have you, into a package. Was that central to the concept of Beartooth?
Yeah, it was. Right at the outset, we recognized that we needed private capital to go out and buy the assets. That money is not readily available. There's always limited public money and there's always limited philanthropy. Private sector has far more resources. So we raised private capital from individuals, again, who cared about the work we were doing. Nobody invested in Beartooth Capital who wanted just to make a return. Like we had a novel thesis. We were a first-time fund. It was kind of a crazy idea, and folks who invested in it really cared about the outcomes. So private capital that was aligned. So what we would call today impact investors, although that term had not been coined back then. We didn't have a convenient name for it. We then went out and bought the properties, but every single one we bought with the knowledge that a land trust, a local agency, a local coalition of community members cared deeply about it, wanted to see it protected, wanted to see it restored, and they could tap into resources from public and private sources, public agencies, state. We got money from multiple states, from federal conservation programs, as well as from private philanthropy, to invest in essentially creating that delta, the uplift in those natural systems.
And so what took you to step away from that and move into kind of like this hybrid nonprofit, for-profit work with communities that you now do at LegacyWorks?
Yeah, that's interesting. So I think private equity, private capital, impact investing is definitely a part of the solution. There's no doubt about it. It's really important, and it's pushing the edges of the system out. It's innovating, and there are great people doing great work there, and a lot of people are excited to do it. I tend to live on the edge a little bit. I could have started a forestry fund. I have colleagues in the space who did at the same time start impact investment funds in timber, and they grew up into the billions of dollars. That wasn't where I went. I was more curious about these harder equations around other kinds of land and whether we could solve for this.
That's too easy, going too well, too many billions. Let's just do something hard.
I don't know where that comes from. It's kind of self-destructive. It's not necessarily a positive attribute, but I'm a contrarian fundamentally. And when it honestly, I think their impact investment field grew a lot. There were very few funds at the beginning, and then the field's grown a lot. So on the frustration that I was experiencing, realizing, yeah, this is a tool. It helps us get a certain distance, and it's applicable in certain places. But with Beartooth, we would make one investment in a ranch in Colorado, and then our next one would be in Montana, and then the next one in Idaho. And each of those investments were beautiful. We built a little coalition around it. We were able to do amazing things. We put this blended finance together, and we accomplished something really important. We built trust. We built relationships. We strengthened a network. Everybody built capacity. They'd done things they'd never done before with a private-public partnership. But then I never got to do anything else with those people. There was so much potential in those relationships and in that capacity, but I had to go someplace else because as a private equity fund manager, you manage private equity. That's your job. You just got to focus on that. You got to go find the next opportunity to deliver those results. I wanted to sink in and go deeper, and I wasn't able to in that context. So thus the transition in launching LegacyWorks, so we could stick around with those communities and work to realize the potential that those relationships, those networks, the capacity could create. Because I see that, we see that as the pathway to the bigger transformative change that we need on a place-by-place basis.
Great. So, this points to some really interesting things, right? Like the need to bring these communities together, the need to have this catalytic capital, the public sector, that kind of a mix. In part because, as we said earlier, the system is broken. We don't know how to measure it. We don't know how to value things that are alive and giving us these benefits. But there are people out there trying. So I want to turn to Rob to ask him, how is it going in trying to bring these capitals that normally the system doesn't look at into the mix?
Yeah. So it is it's nuanced, right? But I have actually good news, right? Which is we are seeing progress. So the organization that I work at, called the Capitals Coalition, does a number of different things. But in short, we want to right now, the system is really valuing produced capital and financial capital. But we also know that we have social, natural, and human capital, which are sort of overwhelmingly exploited. And our big theory of change is that, and our reason why we exist and why my organization merged into the Capitals Coalition is that the big driver of that is that a major driver of that is that we're not putting a value on those, because right now the value is sort of zero until you do something with those capitals, right? Or sort of exploit them as much as possible. And so the organization that I ran, which started as a proof of concept at Harvard, was focused on putting a standardized monetary valuation on the impacts and dependencies of those other capitals, so that it could plug into the existing sort of financial system, right? So that when you are evaluating an investment, you are actually able to sort of put in a sort of risk-adjusted return, or modify your aggregated cost of capital based on those risks and opportunities. And there's been a lot of experimentation around that work. This is not a brand new idea. Caring and Wholesome Lafarge and a number of organizations, Nuin-Tara, have been experimenting with valuation for probably well over a decade, probably 15 years or more, but there wasn't a standardized way of doing that, and that was also leading to some sort of asymmetry of approach. Some of the assumptions that go into those valuations were not necessarily being disclosed or shared. And so one of our, when you think about like what is a standard, right? It is the plug that we can go from, any state, in the United States and use the same standard plug, right? Or plug in our iPhone, right, into a standardized port. Those things lower barriers to entry and costs of doing business. So we are trying to put in that standard. And we have had a bit of exciting experimentation that's been led by the Capitals Coalition. So we set up a standardizing body, and we released about 100,000 of what we call value factors, which are sort of monetary coefficients that if you calculate your impacts, right? So your your water filtration or your air filtration or your carbon sequestration, the value factor allows you to multiply that and turn it into a monetary terminology. And then we have a number of projects one of which is called Nature on the Balance Sheet, which is organizing a number of different sort of cohorts, one of which is the forestry sector. Another one, which we're launching this year, is in the mining sector and an agricultural sector, in order to help those organizations use those value factors and actually capitalize the natural capital that they have within their purview and the impacts and dependencies that natural capital contributes to, and put it onto their balance sheet. And the forestry project has been very, very successful at a sector level in doing that.
Yeah, so it seems like the end goal here is to get the financial system to understand how it depends on natural systems, human systems, social systems, and plug it into their balance sheets, right? I know that TNFD and before it, the Task Force on Climate-Related Financial Disclosure, TCFD, are also working on some of this dependencies, and I know you work very closely with them. It's gotten it into some of the ways we do standardized accounting, right? Like there's accounting standards boards around the world. There's a main one globally called the IFRS, and they have under it ISSB, a lot of acronyms.
Yep.
And then the US has its own accounting standards boards, FASB, for instance. Is it working? Is it getting into at the end of the day, into these boards and how companies are using it?
So I'm an optimist, and I would say yes. So for just to go a little bit deeper on some of those acronyms, there are two major sort of accounting bodies. There is one in the United States, and then the IFRS, which does accounting sort of standards for the entire rest of the world, other than the United States, basically, right? And they have a body under it called the International Sustainability Standards Board, ISSB. They've come out with 2 climate standards that have been adopted, I think, by 37 or 38 countries at this point. So the way it sort of works is they set the standard, and then each country needs to do some of their own sort of regulatory review and adopt it. And it is slower going than I think all of us hoped originally. But these are actually some like major jurisdictions, right? Including China, actually, I think very recently said that they were going to adopt it. TNFD also has a commitment by the ISSB to build their biodiversity standards off of the work of TNFD, as they did with TCFD. As well. So all of these acronyms sort of boil down to they are getting notice by the global regulatory disclosure systems, right? And disclosure, the function of disclosure is not just to produce a pretty report. It is to produce a standardized system of information by which investors can evaluate the health of a company, particularly in public markets. And once you have a standard system of sort of disclosure, so most of those are not yet sort of doing full monetary valuation, but they are requiring the disclosure of metrics, which, as I mentioned, it's relatively a easy multiplication once you've done that. There's a few things right about that need to be sorted out with the accountants on, like control and proof of a transaction, right? That is one of the biggest issues, right? Is until you cut down the forest and you sell it, right? Some accountants would argue that you haven't proved, right, the actual value of it, which is why I know we're going to talk about it in a second. Credit markets are so important to the system because they are providing proof of the transaction before you've cut down the forest and before you've paved over the land and sold it.
So they're giving them a value, but it always feels like nature is a step or two behind carbon and climate. Is it because it's just much more difficult? There isn't one unit that you can count like a ton of CO2, or what makes it so difficult?
Yeah, both of those things, right? Which is, climate is the impacts are very, very broad, but there are, a handful of greenhouse gas forcers there, which are, easier for us to quantify and count. Nature has a huge amount of complexity to it, and frankly, it is also much more context dependent, right? So an impact on a wetland or a forest here in Providence, Rhode Island, is very, very different from that in sub-Saharan Africa, right? And versus the and I don't want to sort of oversimplify, right? Sort of the disparate sort of climate effects around the world, but those pathways are a little bit more standardized.
Right,
so
right.
yeah.
So I wonder if we could turn to Marieke and ask, you work with a lot of impact investors and other investors in the field. You're constantly talking to them about these issues. Can you give us a sense of how all of this is filtering into the investment community, and who's leading and who's doing really interesting work on bringing nature onto our thinking in the financial world?
Yeah, that's working right now.
Yeah, that's,
Okay, great. I think, is it working?
I don't know.
That again. Sorry, I broke your mic. Okay. All right, I think it's working now.
Yeah.
So actually, I'm a little bit of the cowboy on this panel in a sense, right? Because I'm kind of here representing private equity, venture, and credit funds, who are really essentially, responding to market signals, responding to what has been broken, and some of them broke it, right? I mean,
Yeah.
like they've been, historically maybe more extractive than sort of net positive, you could say, as an asset class, right? So they are now responding to what they're seeing and saying like, oh, I'm going to invest this way. I've got a solution to a problem, a climate or a nature issue, and I'm going to sell it and scale it and so on, right? And they tend to stick to their knitting, right? So there's a couple different ways, though, that you can have impact, even with those more traditional, 2 and 20, 10-year funds and so on. But like you can have impact in what you invest in. I think this came up in a panel earlier this week. So you can choose to invest in a fantastic game-changing technology when it comes to nature and climate, or you can also fiddle with how you invest, right? So blended finance and things like that. And I think that we would be remiss if we didn't acknowledge that things become investable for more traditional private equity impact investors, if you will, when philanthropy and other more creative models have primed the pump and have sort of done the market testing. And we also need the data, right? We need the satellite imagery. We need to understand, so that we can also price these things and, so that funds can go out and raise capital. I will say, like to your point on standardization, I am seeing some promising signs even within the sandbox that we play in at ICM with these funds. There have been innovations around, and a lot of some of it's bottom up and some of it's top down, like the impact reporting norms, where you have allocators who are saying, I would really like to see your impact data, impact fund. I'd like to see that side by side with your financial returns data. And we've done our research with our LP advisory council as well at ICM. They have told us we really want to understand in your impact reporting what's not just the correlation but the causation. How is your impact thesis? How is that actually driving the economic value or the business value at the fund? So they're looking for that, and the only way to kind of get that right is to have a better understanding, to have more cohesion, consistency. And we're seeing that with a Common Impact DDQ project as well that we're going to be undertaking with Impact Convergence Forum and Impact Frontiers as well. We're just getting allocators, sort of the very top of that funnel there, but just getting them to ask the same questions of fund managers in the same way. Right now, we have an accountability and an attribution issue, right? Where different fund managers will say, I claim full credit for the GHG mitigation or whatever of this particular investment. And, another fund manager will be like, I take that credit too. Well, who's, what percentage of the, where do you sit on the cap table? Like what's, what can you actually take credit for? And I think we're starting to see people moving to more consistent and, standardized ways of doing this work. But you don't want to be onerous. You have to thread the needle. You want to make sure that you allow people to continue to innovate and that you're landing on the right numbers, because you can start to misguide people pretty quickly.
Yeah, I think most people out there, when they think about funds and how this plays into funds, the thing they think about is ESG, right? Because it's been in the news, and now the backlash against ESG and the headwinds against it. But we're talking about something slightly different. It isn't just about monitoring environmental, social, and governance, which is part of it, but it's going beyond that, right? Like, how do you have an impact? Can you parse that out for us?
Sure. I mean, I like to say this, and it's like maybe half true. So ESG is, the way I think about it is like, how is what's happening in the world affecting the bottom line of your company, irrespective of what your company's in the business of doing? So it's a little bit about sort of that risk landscape and how is that kind of affecting you. And impact investing, or what our members are working on, is sort of more directionally around how's the bottom line of your company or your business affecting the world? How is it contributing to a solution or solving a problem? And that's not at all to undervalue ESG analysis and doing business in a good and proper way and thinking about that. And most of our members actually have ESG policies. They may not call them that or be really loud and proud about that
Certainly
in this particular
not anymore,
moment.
right?
But most of them do, because it's just like, it's just good business. But impact is a little bit different. We think of it as the widget, the product or the service, and how is that, as it scales, ideally going to have a net positive impact. And there are externalities. As anything scales, we have to have intellectual rigor and honesty around that. And so then how do we value that? How do we kind of put a price on that? That's only going to help, I think, our managers do their work better, and it'll help them scale and innovate within the sandbox they play in.
Are you bullish? Do you see this taking off? Are we headed in the right trajectory? If not, what do we need to do?
I tend to be optimistic, but I think we need more innovators like what Greg is doing at Holdfast. We need more of that type of we need more political will. We need people to kind of be willing to also ask questions. And this is going to sound like heretical for me to say it, but like, how much is enough? And I represent a lot of private equity investors, and most of them operate in a very traditional way. But I think it's important to understand, like, we're not, you can kind of make a mess and address the problem later on, or you can change how you do business from day one, and maybe it's less expensive to everybody if you do it that way.
Yeah.
You can still make a lot of money.
Yeah, and when you came to speak to the class, the panel that you were on talked a lot about the incentives on investors and investment managers, right? Most investors are judged on a 1, 3, and 5-year performance against the benchmark, and in that world, what ends up counting the most is that 1 year, because it affects both the 1, the 3, and the 5, right? Yeah. And so the incentives are wrong. Is there work out there to change that?
I mean, there is some work. Again, we're only private capital. We like to think that impact mostly lives in the private capital markets, because there's the short-termism that seems to be even accelerating into the public space. And so that's where most of the world's capital is, right? Yeah. So it's really important work. You've got a longer time horizon if you're a private markets investor most of the time. And so that can be helpful. And we see more evergreen funds, and we see more holding companies and interesting things like that coming out of the woodwork there too. And you see some interesting legal innovations happening in this space as well, public benefit corporations or golden shares, or ways to kind of create like impact really embedded into a company, and ideally so that as it scales and maybe has different ownership, it still is intact there.
Yeah, so I'm going to be the bummer, and then we're going to turn to Greg to give us a little bit of hope. But the bummer thing on this idea of how we treat the future, just think of that one number that it's in every balance sheet that you will ever build if you go into private business, which is the discount rate. What the discount rate tells you is that the future is worth less than today. And if that discount rate is somewhere in where it usually lives, which is somewhere in the 5 to 10%, let's say 7%, at 7%, $100 in 30 years is worth like 14, right? You go out 50 years, it's barely worth anything. So if you think about it, we have this number that is essentially telling us the future is worthless. And the longer you go out into the future, the more worthless it becomes. So we need to find ways to change some of the stuff that's broken, that's sending the wrong signals in lots of interesting ways. So here's where Greg comes in and lifts our spirits and tells us about one of the most interesting kind of corporate and governance and private transactions that I've seen in the last 20, 50 years, which is Patagonia basically, or the founder of Patagonia, Yvon Chouinard, basically said, I am going to give the shares I own in Patagonia, which was most of them, all of them, to a trust who is looking after the future of the earth. How did that happen? Tell us about that.
I'll try to be hopeful. Well, I think fundamentally, Yvon and his family were motivated by everything that we're talking about today. And I think while you're all here, they've been worried about the state of the natural world since the very beginning. And they'd been making changes and decisions around how they operated their business and the product they made, how they made it, what they decided to make with that in mind. And they were trying to do different things to fix the problems that they saw. And so they'd been on this journey. And for me, this whole process that we ended up going through started, I mean, it was in the middle of COVID, and Yvon was pissed off because they closed the beaches in Southern California. He couldn't surf. He was still surfing. He was 84 at the time. He couldn't fish. He couldn't go outside. He couldn't see his friends. He couldn't travel and see the world, which he's always done. And he was getting all this bad data around the biodiversity crisis and the climate change. And so there was a lot of frustration, and he wanted to do more. And, you know, he talks to a lot of people and gets exposed to different opportunities, and he didn't have the resources that he wanted at scale to do more. And so I was in my laundry room. I don't know if you all, I don't know. So this was the April of 2021. I had been in my garage and then got moved to my laundry room, and I had this phone call, and Patagonia's CEO, Ryan Geller, at the time said, Yvon wants to sell the company. He's told it to me 3 times. He's threatening to call people that he knows and look up their names in Forbes and just sell the company. And he's a very kind of provocative person. So this idea of, like, you know, these stories you hear about in law school, contracts on a napkin, you know, Yvon might actually do that kind of thing. So we had to meet the need. And so we started a process, and we ended up in a really unconventional place. We started in a very conventional in the sense of, let's sell the company and create a lot of liquidity, and we'll have a pile of cash to go and do this work. You know, unconventional in the sense that he wanted to give all that cash away. But we started talking about, well, what happens to the company? Are you worried about the company? I'm very worried about the company. The company, whoever we sell it to, can't change it. Well, we can't really guarantee that that's going to happen. How much money do you want? Well, I want more. Well, do you want more like I want to liquidate it all, or just a little bit more? Well, you know, what are my choices? And so we knew he was looking for a structural solution to protecting the company and creating more value that he could deploy. And we got really interested after kind of going through this process over Zoom, which was really, and not something he really enjoys talking about, like discount rates. I would never say that to him. Corporate structures, he's not interested in it. He just wants things to happen. He's a very action-oriented person. So it was a really exciting opportunity for me to just kind of work with an amazing team, kind of kid in a candy store, be as creative as you can be, no idea is a bad idea, like put it all on the table, and what can we figure out? We created this, we tried to reverse engineer what we'd seen in Northern Europe with some really interesting companies like Carlsberg, who's been owned by a foundation for 150 years, They have innovated successfully. They've protected their business successfully. So we knew this kind of purpose-owned structure would work over time. And it would work also in the sense of not just protecting the business, but innovating and being relevant. That was really important. We didn't want to put something in place that would cause Patagonia to languish, that wouldn't motivate the business to try and be continuing to make pinnacle product. All of that had to stay the same, just like other things that were important to us had to stay the same. Giving away 1% to the planet, innovating in our supply chain, being a responsible business. And so we created a purpose trust and we created a nonprofit. The purpose trust owns all of the voting stock. The nonprofit owns all of the non-voting stock. That breaks down to 2% in the purpose trust and 98% in the nonprofit. We got really interested in this idea of...
So let's break that down a little bit. So the purpose trust basically makes all of the decisions about what happens to Patagonia. Is that that's one way to think about it, right?
Yeah, I mean, Patagonia has a CEO, a leadership team. They've got a board, and that team reports to the board. The board and the directors are elected by the purpose trust.
Okay.
And the purpose trust has a committee. The committee receives information about the business. Right now, there's a lot of overlap between the business's board and the purpose trust board, but that it won't be that way for much longer.
And that's kind of a guardrail to say this purpose trust needs to keep Patagonia on the straight and narrow,
Completely.
doing the right thing
Completely.
as we see it from the perspective of the planet and the environment, what have you, right?
Yeah, if the business had a CEO that said, I want to start making a lot of T-shirts, I want to start making, a bunch of commodity
Fast
stuff.
fashion.
Exactly. And if the board went along with it, then we would organize a purpose trust meeting. We would fire the board. We would put in new directors. The new directors would fire the CEO, and we would just decapitate all of that leadership and reverse that decision. So that really is how this would work.
And then it gets better, right? Like on the other side, you have this other entity which receives all of the dividends, i.e. the excess profit that is not being reinvested into Patagonia. Completely. And it says, use that to heal the earth, so to speak.
Yeah, and because we used the C4, because they were willing to give it all away, the C4 doesn't pay any income tax on the dividend income that it receives. So we doubled essentially the financial horsepower of the organization. At the time we created this, my youngest was really into Despicable Me, and there's a hilarious character. There's an evil bank where this Gru is the villain, kind of applies for a loan to do some preposterous stunt of stealing the moon, and he goes to the evil bank to get the money to do it. And I often think about what we created as like the nature bank. And I talk to a lot of organizations. I talk to folks like Carl and partners that we have in common, and they have all interesting projects, and we have conversations, and we're like a bank giving money away to protect the natural world.
Can you give us an example of a project that you funded or something that you funded out of that money?
Yeah. So a couple examples. We are funding the Nature Conservancy with a lot of other partners. And this is public, but there's a acquisition of 4 dams on the Kennebec River from Brookfield Asset Management. The idea is to remove those dams and open up 400 miles of river habitat to help restore Atlantic salmon, which are massively under threat. We also, last year, there was a company that owned about 7,000 acres of land adjacent to the Okefenokee National Wildlife Refuge. They were seeking permits on that land to degrade it. To Carl's comments about what happens in the West, they were seeking to build a titanium dioxide mine which is used in paint and other industrial products. So we partnered with, Patagonia was already working on the ground with some groups to campaign against and try to motivate folks in Georgia to prevent this outcome. They're very pro-business. It was very difficult politically, I think, for a lot of folks to do that, but there was a business solution to that problem, which was to buy the land, and I worked with some partners to make that acquisition.
Very interesting. So what I love about it in the ad campaigns that I saw around it was like, now Earth is Patagonia's major only shareholder, right? Like fascinating change in corporate structure, but obviously that requires immense amount of leadership from somebody like Yvon Chouinard, willing to give away billions to do this. That is not the answer to corporate structures around the world, but maybe it can paint some directional ideas or innovations that you see out there. Are you seeing anything that can be maybe more widely applicable?
From an ownership perspective or
Yeah.
corporate governance? I mean, I think when we did the process and you start having conversations with different legal experts or transactional folks, you get the standard answer. Like, you know, markets being markets, everyone kind of, you go to Harvard Business School or Harvard Law School or Yale Law School, everyone's trained in the same methodology. You get the same answers: go public, sell your company, maximize your return. You're legally required to actually do that. I mean, under Delaware corporate law, it's when you get into that you're selling the company, you essentially have to go for the highest price, even if it creates risks for the business that you're selling. It's not your problem, it's the next person's problem. So this sort of all you can get mentality, and the folks that you talk to when you're seeking these answers are going to give you the same old answers they've given everybody else. And so if you want to be creative, you've got to, it's extra work. And everyone you talk to is trying to really they're not encouraging you to be different or think different. They'll tell you about the risks. They'll say, well, if you look different, you won't be able to raise capital. If you look different, consumers you might not get engagement. You won't get uptake. You can't scale. And so, like, whenever Yvon hears that kind of feedback, he knows he's on the right track because he is a contrarian as well. And so that's exactly where he wants to be. And so there is a community of folks that are starting to emerge who are more creative, who are giving different answers to traditional questions. And there's a lot of founders and owners of businesses that are really curious too. There's also a lot of businesses out there with different ownership structures than the status quo that people don't really talk about. And we're a little more forward and more, we're using our business more as a platform. Other businesses that are owned with alternative structures are less vocal about what that looks like. But there's a convening of these businesses. Newman's Own is a good example, and they're providing a lot of leadership around convening businesses that are 100% committed to purpose, which is really exciting. And so we are working with those partners too. I would say to the work that everyone on the stage and hopefully folks in the audience are working on, if we are able to solve nature on the balance sheet, if I could take a dividend from Patagonia and just turn around and buy something on the open market that represented protection of the natural world, fairly valued, that would be unbelievably easy. I could just do a transaction and buy something on the market that represented the work of all of this distributed work of NGOs or capitalists potentially. That would be unbelievable. But today it's much more, there's a lot more friction to be successful in that space.
Yeah, and I think what's also interesting is that hasn't stopped the great work in Patagonia, the company, because I just read your most recent sustainability report, and that is a remarkable document. It's a document that basically says, here's how we got things wrong. Here's the things that we didn't quite hit. You never see that in a sustainability report. You know, it's always like, oh, we killed it, we did this, we saved that. You know, they never talk to you about like, this is hard. We tried, but we didn't quite get there. So I'm gonna turn to the audience. So begin your thinking about your questions. While you begin thinking about your questions and walk up to the mics here, one last thought from all of you. One big area of thought on all of this is risk. What is the risk we're facing from natural systems decline, and how do we deal with it? And whoever wants to jump in on this, jump in.
I mean, so there are estimates that the Earth's natural systems provide like 120 to 150 trillion dollars of like value a year. That is not properly being valued, right? So this is really, really important to our global economy, and yeah, I mean that's sort of the existential risk. And the fact is, again, I'm an optimist, and I've seen, despite all the bad news, millions of people leave poverty every day because of capital markets and because of innovation, right? We have seen so much innovation, and I do believe that we will innovate through this challenge. But call me an optimist.
I mean, it's clearly one of the most powerful tools humans have ever built, right? And if you think about it that way, you can use a tool for a lot of things, good things, bad things, right? You can build a house with a hammer or kill someone with a hammer, right?
I was just gonna say that.
How do we change that? Any other thoughts?
I think it'd be amazing if nature could just go on strike for 24 hours and show us how screwed we are and how much, how dependent that we are on it. You'd struggle to breathe, you'd struggle to eat, and if it just stopped working for free so well, more difficultly every year, I think people in markets would start to
Collective bargaining of
Yeah,
nature.
exactly.
Yeah.
Yeah, I love that idea, and we do see that happen every time there's a natural disaster that stops us in our tracks. And in our community, when that happened, when the mountainside came down, we had a big fire, had a very intense rain event, and the mountainside came down and killed 22 people and destroyed 400 homes. Everything stops in its tracks. It's like there are those moments, and boy, do we come together when that happens, and we're ready to change our minds, to shift our behaviors, to jump into collective action. To give, to take care of each other. Those moments, I think, are really potential inflection points. We usually, good things happen, and then we lose momentum, and we slip back into the deep ruts of the current model and the mindsets. I think one of the most beautiful things about the Patagonia story, Yvonne and Melinda have never had a conventional mindset. Like Yvonne's always been a contrarian. Difficult to get along with at times, right? If you're in a conversation, like if it's not conventional thinking. He brought a different mindset to that whole situation, and then he and you guys brought alternative solutions to the table. I honestly think a lot of what needs to shift in order for us to account for the risk, to account for the value, to change the markets is mindset shift. It's consciousness of these things, and that's really where it needs to begin. Because if the fundamental principle underlying our market economies is more, which it is, it's fundamentally about more. It's baked into the Delaware Code. The people, the accountants, the lawyers who write the agreements, who manage the transactions, that's their mandate is more. We're not going to get where we need to go. More is not going to work. It needs to be a really different first principle. And that's a mindset shift.
Just to double click on absolutely +1. It is, it's like, I mean, I think like Ricardo, something you said yesterday on a panel also, the insurance, if it's uninsurable, it's uninvestable, really stuck out to me as well. And so just thinking about, that's for me this past few days, just thinking about like insurance markets and kind of not the canary in the coal mine. I was at an event a little while ago where somebody who represented a really huge insurance company was like, we're not the canary in the coal mine anymore. Like there's blood coming out of the canary. Like it was a really visceral image, but he was like, we can't take care of it. Insurance can't fix it. It's not going to save the day. So what do we do? But I think it's political will. I mean, I think a lot of the tools are there. It's just about, why are things the way they are? Sometimes it's because certain people want to protect their interests, and we've got a lot of the tools, but we need to make different choices.
Yeah. And even further from what you said, Carl, it's not just more, and it's not more quality, it's more quantity, right? It's quantitative more, not necessarily qualitative more that's driving things. Any questions out there? Let's come up to the mics. Let's line up on the mics because we're going to need mics. So, yeah. All right, good. I'll start here.
So my question is about categories of investment converging. So when I was younger, I was living on an organic farm, reading Gaviotis, and I was looking at how technology could be applied to rebuilding ecosystems. And I'm wondering if there's a way of combining investment classes so that robotics, automation, artificial intelligence are part of the solution to environmental degradation. and whether you can tap into this frothy market of VC investment around technology.
Anybody? Can we put the froth to good use?
AI is definitely, I mean, for monitoring, reporting. I met an amazing organization recently that's using AI to, at 3 meter by, I'm going to talk to Joe, who I met earlier with his geospatial. I'm going to check this with him, but 3 meter to 3 meters for resolution, monitoring deforestation and illegal mining in indigenous protected areas in Brazil and the Amazon area, and allowing them to, giving them those coordinates of where that's happening so that they can go exactly to that location, confront those actors, and if they don't respond, then giving them data that they can use to share with the federal and state authorities who are really interested in shutting down activities that are going untaxed. They have kind of different incentives, but it allows the indigenous communities who have, in many cases, large landscapes. They know exactly where to go, so it's really efficient with their time, and it's more effective and stopping things early. So that's something they're using AI to see that happening, and so that's just one that happened last week. It blew my mind.
Yeah, there's a lot of meetings lately about how we use AI and technology for good. And I know some venture capitalists that are looking at how you mix all these different things together and how do you make that happen. All right, let's go over here.
Okay, hi, my name is Sebastian and I come from Ecuador. And so I have a couple questions. So how much of your knowledge really comes from like working with these communities to address these issues? Like if you can put a percentage on it, I would be interested to learn that. And then like, sure, like I think impact investing and everything, it's important, but when you go to communities that are, for example, being displaced by floods, these people like, need basic needs met. So like food, water, how are like your firms addressing those issues? Because for example, when we look at like models like Project Drawdown, they now educate us that in order to like, address these natural issues, we should tap into education, for example, for little girls and women. And so I'm just curious how your funds and like the places that you work address those issues. Yeah.
I'm happy to jump in on that one, and it's a great question. I think like the best impact funds, and there are, better and worse impact funds for sure, really do stakeholder analysis, and they kind of go that end user, right? They think about how is this gonna, I mean, we're all people at the end of the day, right? Again, whatever widget, product, service, it's gonna affect people. So they listen and they learn from people before, early on, before they even build the thesis. And they try to understand what are the kind of concentric circles of impact that, again, they might have a couple of KPIs related to carbon or whatever it might be, but everything here is pretty intersectional in nature, right? And so different communities are going to see these risks show up in different ways, or will be impacted by or affected by a product in a different way. And so I think, you have like an Impact America fund. They're a member of ICM. They do great work around this. They have more of a social investing strategy. So there are some people who are doing really good work around it, but I think not everything is going to be solved by private capital either, right? So some of these things you do need policy, you do need, other public-private partnerships and things to kind of come in, because it's going to be, I think, wild and crazy the next 10 to 12 years with the effects of climate change. We're going to see some serious disruption and some pretty bad things happening, frankly.
Yeah, I think Marieke is exactly right. There's a I think of it as like all the impact we need to have, the work we need to do. There's a fairly thin slice of it that impact investing is able to, market-based, market rate return impact investing is able to address. There's a lot of it that's got to be the realm of other kinds of capital, public funds, government dollars, private philanthropy, and then sort of concessionary or catalytic capital that's not impact investment capital that's not seeking a market rate return, because you can't profit off of a situation adequately relative to the risk you're taking to get the appropriate risk adjusted return, which is what we mean when we say market rate, and quote unquote what an investor would take as a return for having to hold that risk. It's a very nebulous term, to be honest, and it's very individualistic. But it has to be a blended solution set And in order to do that, you need a lot of capacity in the system. We definitely need some innovation. When you think about the distance between a community, especially in Latin America, a grassroots community, how much access to capital and power do they have? Very, very little, generally speaking. You think about where the capital is aggregated in the system, it's a long distance from them. Impact fund managers are near the top of that. They have access to the capital and they're able to raise funds, but they're pretty long distance from the community. And kind of in the spirit of that Patagonia Impact Report, when we launched Beartooth Capital in 2005 and went out into these communities to buy ranches and do good things, we were so out of touch with those local communities. We were the problem, in fact, to farmers and ranchers being able to afford farmland and ranch land. So we were part of that problem. We weren't part of the solution to the local communities because we were so far distanced from them. And it took me leaving the private equity model and building a community-driven nonprofit arm in order to be able to slow down and truly take the time that it takes to build trust and relationships and connect with community, understand what they need, help them build their capacity to drive those changes themselves. You had to kind of flip the model.
So we don't have a lot of time, so I'm going to have just a few more questions. Eva, go ahead.
Hi, thanks so much for being here. To follow up on the question about AI, so you all were mentioning some different use cases of AI that support nature and the development of this, but also data centers powering this AI are arguably one of the biggest destroyers of nature and the climate. So where do you fit data center development into your impact or not portfolio?
Anybody?
I don't invest in data centers.
I don't think any of us invest in data centers, but yeah. Anybody?
I think it's a good question. I don't think any of us are doing that work directly. There are some amazing people helping communities navigate that I could connect you with, but I don't know that there's a good answer to that question out there right now. I haven't seen one in the system. Anybody who's navigating that direct impact and tension.
There are some folks. There's a lot of activism going on around trying to come up with a leverageable playbook that different communities can use to resist that kind of development activity in their communities.
And I think that to the collective bargaining point, as soon as people start to resist and push back and say, not in my community, that opens up the door for unless you do something different, unless you use renewable energy or do some other approach or make things better on water. I think there's some technological solutions for some of this coming up. So I know on the cooling front, there's a lot of development in terms of lessening the use of water. We need to push them as hard as we can because the amount of money going into this right now is mind-boggling. I don't think we've seen that amount of money in the history of humanity going into one thing in this way, which is dangerous and a risk in so many ways. But if we don't shift the way it's being done, it's going to be a real problem.
Well, I would just say too, just reacting to this. Okay, water. Paying more for electricity, all of a sudden people are really worried about data centers. But if you look at, I've got on the way to the airport to even come here, there's a huge, Amazon's building 2 warehouses right next to that. You've got distribution centers outside New York City delivering products so consumers can get goods within 24 hours or 12 hours. So, the footprint, at least in terms of the conversion of brownfield or greenfield lands or conversion of ag land into all of these, it's from my perspective, it's great that people are caring about data centers because it is increasing some costs and there's other social issues around it. But if you're just looking at it in terms of landscape, it's where's everybody been? You know what I mean? So it's it would be good for everyone to just think about the deployment of Amazon warehouses too.
So let's just go really quickly, question, and then anybody takes whatever they want because I think we're going to have to end it.
Sounds good. I'll be quick. A huge fan of Kim Stanley Robinson's Ministry for the Future, his discussion around carbon coins and carrots and sticks and that whole thing. And so I wanted to ask if there was some kind of purpose trust globally, so to speak, that was deciding what asset classes would remain in portfolios and would disappear. What do you think would disappear overnight? What asset class would just be gone, given that purpose trust's take on this? And what is the most effective mechanism for enforcement? Carrot or stick?
All right, cool. Good question.
Hi, thank you all for being here. I believe the work you do is very admirable, but I would say that maybe some people in the federal government would not agree, and they'd say that it's a part of like the culture wars or just not important to focus on. So I'm just sort of wondering, how do you as managers of these impact funds avoid some of those regulatory pressures and stay proactive with a lot of the issues going on with the government?
Right. Daniel, next.
Thank you. I had a really similar question to Cole there about the impact of the current administration. I was wondering if the administration's climate policy has also impacted the demand from investors to actually invest in impact investing.
I had a question for Greg about like Patagonia's model, which has never really been done before, I guess. And like, to what extent do you think this is replicable for other companies? And like, could we perhaps do something? Because you said like mentioned that 2% is in a purpose trust and 98% is going towards the nonprofit. Do you envision companies doing like a kind of a lesser version of that, where like 10% goes to a nonprofit? Like, do you think that's like, yeah, possible?
Hi. So first of all, just thank you so much for being here. I feel like I've learned a lot, but I just had like a larger question. But so I've been thinking a lot about climate and biodiversity as this huge interacting system where ecological realities influence culture, and then culture shapes politics, and then politics shape financial incentives. So I guess one of the biggest questions I have is, how do you guys make that system, this entire ecosystem, legible to people so that ecological externalities become visible before they turn into crises? Yeah, thank you.
Purpose trust, what do they NICs and carbon coin issues from next to the future policy, how that's affecting things. Question for you, Craig, on what could anybody else do in this?
Yeah, well, it's totally replicable. I mean, it's just a question of will, and there's a whole spectrum. So you could do it with a purpose trust, you could do it without a purpose trust, you could do 100%, you could do 1%. So there's a choose your own adventure there of alternative ownership, and there's a lot of people to the purpose trust question over here. There's a lot of folks talking about how to use this tool. It's new, so I think there's just people are getting more comfortable with it, making sure that it, so they're watching these different test cases, and so that's exciting. I love Ministry for the Future. That's a great book. I think there's like 4 copies moving around Patagonia. We've got a little library. So there are some really interesting, I think even later on, Land Banking Group, who I'm super interested in what they do. I think about them when I think about Ministry for the Future. So.
I was just going to jump on the transparency point and how do you change that? And that's why we believe in monetary valuation, right? Which is to basically say, and by the way, there are people that think that putting a monetary value on ecosystem services is like absolutely evil. But the fact is, everybody around the world really understands there is probably a 2% sort of culture or community that does not use money, but people have understood money as a medium of exchange for thousands of years. And so by taking a esoteric metric, right, that somebody may say, I don't know, is that a lot or a little bit of carbon? Is that an acceptable amount? And if you put that into a sort of monetary term and you're able to compare that to the other metrics that a company's producing, that really feels to me like the way to sort of change the game and change the culture and build that culture awareness.
Yeah, I like that, Rob. I don't think anybody's saying that the monetary number is the absolute truth and enough and all you need, but it's absolutely a part of the equation. And I think it's to like the carrots and sticks and the systems approach, like how do you change the whole system? I think you have to jump into that complexity and all of the grayness there. I don't think you eliminate any asset classes, to be honest, because they all matter to what we need as a society, what we need as people. And we need the technology. We need to push on technological innovation, but we also need to lean heavily into community engagement, into elevating people's voice and power, into distributing power, to shifting the mindset from more for me to enough for everybody, because there really is plenty. We have to be willing to embrace that complexity. And if I find myself coming to a simple and strong opinion that's unidirectional and not gray, it's not it's black or white, I'm probably wrong. I'm probably not taking the complexity into it enough, right? So we need to really sink into that complexity, take the systems approach, and I think y'all are on the right track. Yes to carrots and yes to sticks.
I can jump in really quickly on the policy questions. We organize Hill Days. We'll take our groups of our members and sometimes the CEOs, even more powerful, the CEOs of the companies that they're invested in, and we'll go talk to legislators on both sides of the aisle. And we have a fantastic reception there. And it's really important to continue that conversation. People can't always make the changes that you might like them to make because there's a lot of other complicating factors. But it's really important to keep on having the conversation. Most people, when you actually explain to them what impact investing is, there's nothing inherently political about that, and there's nothing, it's not antithetical to fiduciary duty or, prudence, loyalty, and care. And so some of the legacy definitions that we have around investing, it's not antithetical, and people, once they figure it out, they're like, okay, this makes a lot of sense. It's becoming a little bit more, there's a little more friction on the margins around having to jump over a couple of extra, go through a couple of extra hoops to get something passed or something like that, or to get an investment if you have to file an exemption because you couldn't use the word climate. So, and that's annoying, and that's not great. But I think that people understand the long-term market dynamics at play here, and they're investing accordingly. And you see that, again, across both sides of the aisle.
Well, we went overtime. Apologies to Mark in the next panel, but a round of applause for our wonderful panelists. Thank you.